Hello everyone and welcome to the Wednesday edition of Coffee and Stocks. My name is Chris. As they know me, the Cowboy. This is Elliott Wave Cafe. Let's get started. So I have some interesting slides to show you. We're going to take a look at SCHWAB today. SCHW is the ticker, and the banks have been pretty much destroyed here over the past, let's say, month or so. But I think there are some interesting setups forming that's worth taking a look at. And SCHWAB here is a perfect candidate. I've written a quick little article. Just a couple of slides, maybe 2-3 weeks back when I was talking about the final wave in the banks, maybe taking a look at the KBWB, which is the ETF for these kind of larger banks. And here I am today, kind of coming again with something that I think it's worth looking at. So let's begin. Okay, the story of SCHWAB, and let's go here. We can take a look. This is a pretty, just an empty chart. And if you're, been doing Elliott Wave a while, you can kind of notice, what's going on in here. You have a pretty strong impulse after the COVID low, which looks, pretty good. And I think you can find 5 waves in here. And then from those tops to the lows here, you come back in what it looks to be, at least for the moment, a 3-wave move. So just a simple kind of clean, chart without any lines, without anything in there. But let's keep going and see what's the next one. So here it is when we put in the labels. You can see in here you have a wave 1, you have a flat in wave 2, you move up higher in a larger third, you do a 4, and then you do a wave 5. These are pretty much the largest corrections, and that's why I'm assigning them with a wave 4 and a wave 2. The meat of the move is here where it's the strongest. You have a 5th wave that's a bit smaller. And, after that, you're selling off again in a 5-wave move here in a 1, 2, 3, 4, 5 for a wave A. You retrace in a wave B, maybe, a little bit higher than 61.8, maybe 78.6 of this decline. And then you sell lower in an aggressive C wave. And what's the normal expectation? Well, what we know from the wave principle is that once you have an impulse and then you have a correction, then you're going to be moving into, the intended origin of the first impulse, which should be further to the upside. So these levels in here are probably going to get taken out at about 100, and we're going to be looking much higher in SCHWAB, over the next, let's say, 3, 4, 5, maybe 10 years, depending on how long this move will take. But over time, these highs here are going to get taken out. At least that's what this pattern in here is suggesting. So let's take a look at the next slide. You can see that we basically pull back exactly into the 61.8, and this is a log scale, so it's based on percentages, but you are hitting it exactly at about 44.87. So again, just a pretty straight motive wave with a nice correction into a 61.8. You could qualify that as a 1 and that is a wave 2, and then possibly a larger 3rd wave will start unfolding, and then you're going to be building in here, maybe a wave 1, 2, 3, 4, 5, and then once you're going to attack the top of the B wave, that's going to be the first big hurdle. Obviously you're going to have the bottom of this wave A that's going to offer some resistance on the way up. Once you climb above that, and you can build in different ways. You can do a leading diagonal in here, you can do a straight impulse. And then once you clear the B wave, because there's always a risk that you could get an X wave in there, but once you clear the top of the B wave, you can start to kind of move much higher. Now you might ask yourself, hey Chris, is this done? What if this is a 4th wave and you're getting another low? Possible. I don't think it's going to happen, but if it does, there's a little bit more room to do it. This could be a truncated 5th already, and then you can start moving higher. If you're doing some kind of a triangle with another drop, then that's going to be the 5th wave, and then you're going to go up from there. So just kind of pay attention to this. I think it's a very good and strong setup, and it kind of matches the KBW ETF as well. So let's take a look at the next one, which is right here. So you can see KBWB in a wave 1. So, you know, at a larger degree, I was looking at this as being a wave 2 cycle, wave 1, you know, here at the primary degree of trend and an A. I mean, you can see it looks a little bit different, right? So, you know, this move went a little bit higher, and then, you know, the SCHWAB, it's slightly lower. The B wave on KBWB didn't go that high, right? It was just kind of fairly short. In SCHWAB was a little bit higher, you know, but pretty much a very similar structure in here. Now let's take a look at the next slide in here, and you can see basically what I'm looking at from stock charts is one of my setups when I'm kind of following what's happening with the relative performance versus the industry that they participate, that they're part of, right? And in this case, it's a financial services. So you can look at, you know, right here is the industry DJUSSB. It's starting to kind of come back to the upside. And this is just the straight, let's say, the absolute price of that industry. Then you're looking at SCHWAB relative to the industry. It's been very, very weak, but it's starting to kind of come back to the upside. You're looking at the industry versus the S&P 500 starting to recover, and then you're looking at SCHWAB versus the S&P 500 as well. That's starting to kind of come back to the upside. So we're starting to kind of curl back. I like the volume in here. I like that we're getting back above the 20-day moving average. You know, there might be a little bit of fighting back towards 60, but I think overall should continue to look fairly decent. So this is just another look at the relative strength. Now, let's take a look at the 3-month charts in here. I mean, this is, again, just a simple, clean look going back to the 90s. I think the stocks, maybe I'm missing a couple of years in here, but it started trading around 89, 90s. And then, you know, you have the first impulse, then you're pulling back. And now, I mean, look at this. It's the clear definition of an uptrend because you have impulses, correction, impulses, correction, impulse, correction, impulse, correction. And it's basically a series of higher highs and higher lows. And if you take a look at the last drop in here, right, that's a 3-wave move, that's a 3-wave move, this was a 3-wave move, this was a 3-wave move. So everything kind of matches impulse correction, impulse correction, impulse correction. And why wouldn't this be the same thing? And you can move back to the upside towards 124, 155, 200, and so on over, who knows, right? 10, 15, 20, 30 years maybe, depending on how long these guys are going to be around. They've been around for a while. So that's the 3-month look. I mean, you can take a look at the first impulse and the correction into 61.8. Take a look at the second slide in here, this correction into the 38.2, so a little bit smaller. Take a look at the third slide, you know, correction into the 78.6, so just a little bit deeper. I mean, just pure fib level, 61.8, 38.2, 78.6, and the last one at 61.8 at 44.87, touched in here almost to perfection. So I'm expecting this to turn back and move to the upside. Now let's take a look at the next slide. You're basically looking again at this the price bar of SCHWAB, and down here you have the relative strength versus the S&P 500. Now, if you can see in here, this bank hasn't been doing a whole lot since you know, the 2000 right here, right, when it was kind of greatly outperforming the S&P 500, and since then it had period of outperformance, but overall we didn't even take these highs. I mean, the price on an absolute basis made new highs, but on a relative basis did not. It's still below you know, this 34. So if you were to hold the S&P 500, you would have done way better than kind of holding SCHWAB in here. That doesn't mean that, you know, this in here is not a good setup and you cannot continue to push to the upside, you know, but just to kind of see how things look overall when you look at relative performance versus the S&P 500. Here is a nice trend line, just a, you know, big horizontal line, I should say, that's eventually is probably going to get taken out. Maybe by the time we make new highs in here, this is going to break, and then we can continue maybe to move higher and outperform the S&P 500. Remains to be seen, but that's a clear level. And this kind of gave a little bit of a signal because he wasn't able to break to the upside, right? The price was moving higher, but not on a relative basis. And then we collapsed out of there. So maybe that was an indication that the banks are still kind of weak. Take a look at the beautiful trend line from the 90s, you know, touch in here. So I think it's a pretty important and valid trend line. again, I think this is going to hold, and we should continue to push to the upside. Yeah, you can always get a big head and shoulder, and the way that happens is that, you know, there's the head, there's the left shoulder, you're going to go up, create a right shoulder, break the trend line, come back, and then let's say Schwab is done, and then it comes back here towards, you know, whatever, $20, $16, $12, if any kind of, you know, crisis happens in banks, with credit, with whoever what, but that's not the case at the moment. You know, the charts is here clearly showing you a pretty beautiful uptrend with a nice, you know, with a nice pullback. Now, I think this is the last slide in here, and then I have something else to show you, but basically what we're looking at is the accumulation distribution. I mean, here's what happened, right? As the stock was dropping down, you have a little bit of distribution. People got scared and started to sell, right? It was a massive drop from 76 to 45, right? So this thing almost, you know, got cut in half. But then very, very quickly, you have a lot of volume and a lot of buying that pushed this to the upside. So now look what happens here to the accumulation distribution line. I mean, we're making new all-time highs already, right? The stock, it's still kind of trying to kind of get back out of here, but it's being heavily accumulated. I mean, look at the volume, you know, and I mean, look what happened in here versus everything that was before. I mean, there's a huge interest into these levels for Wall Street to accumulate, and I think this is going to propel it all the way above 84, 82, you know, again, over the next 1, 2, maybe 3 years. That could take a little bit of time. Nobody knows, but it's interesting to see, because if this was going to be still weak, you wouldn't see accumulation, such a heavy accumulation in the stock, right? You would see that this line will continue to kind of drag itself, the rallies will get kind of sold into, and then this will continue to kind of trend lower and be more in the distribution phase. But it looks pretty good. So let me get out of here, and I'm going to show you quickly you know, when I've talked, for example, so if you go into the Pigeon and the Statue, so this is the newsletter that basically gives you updates on the markets that will follow, right? So S&P 500, NASDAQ 100, Dow 30, gold, silver, Bitcoin. We look at the dollar index every single day. So, you know, if you want, you can kind of subscribe in here. Now, this is a paid version, but, you know, there's going to be some free articles every once in a while. It's not expensive, but, you know, it keeps you up to date with what's going on. Every single day at 3:30, you're going to get an email with the latest updates on these markets and, you know, the proper counts that I'm kind of following along. But I wanted to take you here to the free articles, and I'm planning to kind of do some more. The last one was here, April is a bullish month. The final wave in banks was basically, you know, right here, right, when we talked about, you know, the KBWB ETF. Right in here, right? So I just wrote a little bit of a piece that, you know, this is going to be probably the latest move. And if you look at the KBW now, we're back, I think, back towards 42, 43. So go ahead and check that out. I think there is, you know, there's definitely interesting information in there. And then if you want to upgrade to something, you know, stronger and you know, a little bit, let's say, heavier, this is, you know, my regular research here, the double shot, all the videos, and then, you know, I got the steam room where I continue to post articles about, you know, different stocks, opportunities, stuff like that. We have the grind house where we take a look at the active positions. You know, we have a weekly ETF that rebalances every single week, trades that we take every single day, you know, with stops and stuff. We got a chat room. And by the way, there's also a 7-hour Elliott Wave course that, you know, if you're new to Elliott Wave and you want to kind of dive in more and learn, you know, from the beginning with examples and PDFs and, charts and explanations, kind of how we trade the waves, everything gets in here. It's a 7-hour detailed daily. Of course, you can download the PDFs, you can keep them, but it's basically part of the larger subscription. You know, so go ahead and subscribe for this, you know, just in case, you know, so you're not missing anything, any free articles that I post in here. You know, I don't share a lot of this information, but every once in a while I'll put something out there that you guys can find useful. So again, thank you for watching. You know, check us out. You know, I'm also on Twitter. I think it's right up here. You can follow me back in here. And I appreciate you as always. And I will see you probably towards the end of the week for the Macro Cafe. Bye-bye.